Thank you everyone for joining. This is part of our partner series, and Matt will be leading the conversation with Danika Palle, who is an auto-ML specialist, and they'll be talking specifically about how it can be integrated into financial services more efficiently and can be used to prevent fraud.
Good afternoon, everyone. Welcome. I'm hoping you're going to hear a lot more of Danika than of me. But welcome. We had a great conversation a few weeks ago around compliance when we had Riani a call. We delved into the constructs and thinking around how compliance often gets in the way of innovation, and how do we get closer to compliance and understand this world of regulations so that we're working better with it, building solutions that innovation thrives, but being responsible at the same time. And I thought, this time around, it would be great to really get into, a few levels down and understand the world of fraud detection, anti-money laundering. And today I've got a real expert and somebody so passionate about it. Thanks, Danika, for joining us. Danika is the Executive Head of Risk and Compliance at Bank X, and she also does a lot of coaching around anti-money laundering for the Compliance South African Institute. Welcome, Danika, and thank you very much for coming here and sharing with us.
Thank you kindly for having me.
I'm going to jump in to spend a little bit of time just trying to get your view of the world, at least the world in South Africa, around anti-money laundering. When I think about it, and some of the really great stuff that we've managed to solve with ecosystem around SIM card fraud for the telcos and insurance claims fraud using some really smart technology and understanding behavior in real time. But AML is quite a lot bigger, quite a lot broader, and certainly a lot more complex than just fraud itself. And we get words and exciting words that pop up all over the place and then used, especially in this country, like whistleblowers and those sorts of things. We also play a massive part in this. So for me, when I try to understand going into clients, where are the big AI, where's all the money being spent and the budget's being spent on AI, the number one item is in the space. It's really become a big ticket item for AI expense. A few years ago, just in South Africa alone, about 24 million rand was spent on AI with sort of double-digit growth. We've been running a banking sector campaign, and I would imagine the majority of that money is spent out of the banking sector. Can you give us a view so early on around the sort of big picture, the AML landscape, and what it looks like in South Africa?
Our landscape in South Africa is quite broad. We are brilliant at drafting and implementing laws. The actual execution of it, we fall a little bit short. But the actual theoretical law that is written is beautiful, and we are global leaders in that space. From our legislative regime point of view, PICA is your primary legislation. And it's gone through two regime changes, or two primary amendments in the past 5 years. So in 2017, we have quite a significant amendment to the legislation that changed the entire legislative regime from a rules-based approach to a risk-based approach that introduced an entire new way of implementing compliance and controls throughout all industries, financial sector, as well as your designated non-financial sector, your non-professional, your attorneys, your estate agents, your vehicle dealers, gambling institutions, and so on. And then 2022 came very much in response to the FATF grey listing and the mutual evaluation held in 2019, with the objective of addressing a number of those findings with the amendment. This then incorporated a number of entities and industries as part of accountable institutions. Here we saw the introduction of crypto asset service providers, now being considered accountable institutions. So in my world, AI means accountable institution, and in your world, AI means artificial intelligence. And now we're bringing the two together. In terms of who are accountable institutions, we moved from 18 identified bodies and industries to now 23. And now it's incorporated crypto asset service providers, high value goods service providers, clearing participants on that's part of the national payment system, credit providers. These industries weren't part of the landscape before, and they are newly introduced into the landscape. In respect of the legislation itself, we talk about the regulatory obligations in terms of combating money laundering, terrorist financing, and proliferation financing. Those three go hand in hand. We introduced proliferation financing from 2016 onwards to combat the proliferation of weapons of mass destruction, where there are economic sanctions placed on certain institutions and countries, and this is primarily targeted towards North Korea and Iran. So these are now your three areas of financial crime prevention: money laundering, terrorist financing, and proliferation financing. Fraud has always been treated separately to money laundering. And those that have been fraud professionals for a number of time, for a number of years, will always treat it separate. But we need to understand that fraud is a crime for money laundering, so they kind of go part and parcel together. Your detection in fraud will lead to reporting obligations in money laundering, so you shouldn't see them as separate. Then if we talk about the actual obligations in terms of money laundering detection and prevention, we are on the same footing, in my opinion, as any other first world nation. We comply very closely to the standards that is set by the FATF, the Financial Action Task Force, and the 40 recommendations, and we have incorporated that into domestic law. So we have rules and obligations in our law that says you cannot do business with an anonymous person. So we prevent anonymity. We require identification and verification of customers. We require the identification of ultimate beneficial owners of legal entities. We've gone into trusts and partnerships. We have obligations for record keeping, reporting. We've gone extensive into our reporting obligations. And as much as this legislation has been in place since 2004, your introduction into the industry, your exposure to supervisory inspections and visits determines your level of maturity in terms of your control environment. So if we think about AML, you must think about it in two levels. Well, actually 3 levels. The first level is the actual law, what it is that I must comply with. The second level is your control environments. How do I comply? And for me as a compliance practitioner, I'm always concerned about the how. Because the what is quite stagnant. What you have to do is clear, it's in the legislation. There may be some interpretive issues, some vagueness in terms of the interpretation, but what you have to do is pretty clear, and I think there's not a lot of contention around that. How you comply differs. How I comply as an institution will differ from how you comply as an institution. Based on my target market, products, service offering, size, and complexity of my business, I'll have different controls in place. From a compliance point of view, I'm always concerned with the how. And then your third level is reassurance. Is your how meeting what you need to do? If we think about it in those 3 levels, all the industries that have been newly introduced into this regulatory space, they weren't regulated as extensively in the past, they now are. They exist, in my mind, in this maturing scale. The greater exposure you have to the industry, the more likely you are to have mature, sophisticated, and robust controls in place. You are more effective in detecting and preventing money laundering. If you are new to the industry, and this is often where you see your larger volumes of non-compliance, your greater resistance to non-compliance, because they are new to it. They are learning, understanding the impact of having to put the controls in place, the costs involved, the number of resources they need, how extensive the control environments need to be, how far-reaching it is, as well as their own obligations and accountability as senior management. The maturity is going to differ from organization to organization and from industry to industry. Your most mature industries right now are your banks in your financial sector, especially your large financial service providers, your large insurers. They have been exposed to AML obligations and regulations since 2004. Should they have already been incepted at the time. They have greater oversight and supervision by day supervisors, more assistance from day supervisors on how to comply, what controls to put in place, guidance that they may receive in respect of what their peer entities and banks may be doing. So your regulators are going to differ depending on their own experience and exposure. Overall, I think it's a little bit contentious in light of the grey listing, but I think as a country, we have great laws in place. As industries, especially in the banking industry, I have seen a very strong pull towards being compliant, especially because they are now met with these extensive regulatory fines. And they've been told the regulator is going to come knocking on your door more frequently. Before, it used to be a cycle of a 5-year inspection. Now it's a cycle of 2 years inspections. And if you don't comply, and if you're not effective in respect of your risk-based approach and your own rules, then you're going to fall short. So your compliance in that sector a lot more mature than in your newer sector.
Yeah, I mean, it's amazing the concept of, imposing rules and then fines and those sort of things on certain sectors. And I've been in situations where I've been trying to help a certain client, and sometimes the client will go, how much is the fine? How much is the cost of solving the fine? I'll take the risk. And that kind of blew my mind. It also blew my mind because I was trying to help them solve the problems. The cost of compliance and being responsible must be incredibly high, because we deal with large organizations, and this is going to sort of lean into why technology businesses like ours exist. These, especially when it comes to money laundering, fraud is very manual. I think you and I chatted about certain banks that have sort of 500 forensic agents just focused on this. That's one bank in South Africa. And it kind of grows and gets even bigger as you get into the global markets. Can you give me some insights into that? That must be a great place for technology businesses to help get rid of a lot of the manual work and errors. We can get into the whistleblower stuff and the hidden things that could happen.
When we have to put in controls and decide on the how, and whether the how is good enough, you have to do what is reasonable and what is the reasonable standard in your industry. When you are in a financial transactional space and your volumes and your value of transactions and onboarding is high, I do not believe that manual controls will suffice. You cannot achieve detection without technology in one way, shape, or form. Because just from a volume point of view, you will not have enough resources to manage it. All the big banks have technology in place and they do not operate without technology. They probably reached a point where they realize resources alone cannot do this. So it's going to differ again, industry to industry. So if we just focus on from the banking sector point of view and what this means from a cost point of view, because you're all right, like some of the big four banks in South Africa have ML teams and AML analysts that exceeds hundreds of people. Now, what is interesting is that there was an article on the 14th of July around an AI model that ABSA had implemented. By the implementation of the model, they decreased their false positive alerts by 77%. I'm interested to know what that meant from a human resource point of view and whether or not they were able to, what did they do with those resources that AI now was doing the investigations for. AML in itself, be it human resources or technology, is an expensive space. And as a compliance officer, I've had to deal with it firsthand. Compliance is viewed very much like insurance because I'm not an income generating department. I am meant to be a loss prevention department. I'm trying to prevent you from getting fines and penalties. But I can't quantify the fine you will get. I cannot say without a measure of doubt that if you fail to do X, you will be fined 10 million because there's no readily available equation or solution that the regulator provides to say if you do X, Y, and Z, then your fine will be this amount. It's very much determined and done behind the scenes by them. So compliance from a cost point of view does become a pain point for many organizations. I've been in that meeting where you sit with an executive that says, well, I'll take the fine. When last did my industry get an inspection? It hasn't been that frequent, I can make that money back. And that's fine, because part of risk management is accepting risk. If you are willing as an organization to accept that risk, then that's on you. And then you, of course, must deal with the consequences of your actions. A lot of entities I have seen have been able to play in that gray space until the regulator catches up with them. Then it becomes a problem of correct. And then the question is whether you wait until such an opportunity arises. I would never recommend such an action. You must always uphold the rule of law as it applies to you. And you must comply with the legislation. Otherwise, you mustn't be in the business because these come part and parcel of your responsibility should you wish to offer these products and services. I am well aware of the exorbitant costs that are associated with AML. AML technology is exceptionally expensive. And I think for the banks who are able to absorb these costs, they find it manageable, although it becomes a very big cost factor for them. My concern always comes around the smaller guy. You cannot expect the smaller accountable institutions that are sole proprietors and have a small staff to have these sophisticated models in place. I think they genuinely struggle with how to comply. They have ineffective controls in place, or they have no controls in place because they're not able to operationally absorb the costs. And that becomes a problem because you're not only preventing, well, the framework is preventing them from complying even though they intend to, because the cost becomes so exorbitant. And there aren't any affordable tech solutions available to them. So that's the other issue when we talk about these costs. It's understanding of where the cost lies and what is the solution going to do for you. One of the biggest issues I had with sitting down with clients that were saying, well, we've just bought this amazing technology and we're going to implement this and this is going to help us fully comply with AML. And then you sit down and you look at it and I'm like, no, they actually only do one portion of AML compliance. So I like to show this diagram because I like to just demonstrate how extensive the AML control environments are. So in South Africa, we still like to speak to AML in terms of the 7 pillars of compliance. So this is the diagram that just breaks down these 7 pillars of compliance. I'm going to just zoom it so we can go through them. But generally, these 7 pillars speak to client due diligence. And this was previously your KYC or your CIV, right? It's now evolved into client due diligence. Record keeping, reporting, your RMCP, which was previously your internal rules, your appointment of your minor compliance officer, training and registration. each one of these are underpinned by their own pillars and sub-pillars and building blocks. So if we take CIV, just the customer identification and verification, this is broken up into how you collect data, the different ways you collect data, how you verify data, how you determine as an organization what your eligibility criteria is. And your eligibility criteria is determined by your risk-based approach. All of these factors and sub-factors are interlinked. One does not exist without the other. Often what happens with technology and in the cost of technology is that there's a lack of understanding of the scope of what you need to do in AML and the capability of the technology. So often when somebody's pointed technology, when it's sold, it's, well, we can do transaction monitoring and screening. But they're referring to watch list screening, which is an element of CDD. And watch list screening is made up of your sanctions, your PEPs, your high risks, your internal watch list. This does not mean transaction monitoring. Transaction monitoring sits in its own space under reporting. Often they'll screen your onboarding customer base, but they're not screening your transactions or applying some type of analytics on the transactional behavior. So now you have a weakness there. Then what they often lack is risk rating. Part of your risk-based approach is identifying the risk every customer exposes to you for money laundering and terrorist financing. I deal with a lot of credit providers. Now, when they talk about risk and I talk about risk, we're talking about two separate things. They care about credit risk, the likelihood to be repaid. I'm concerned about AML risk. How likely is this person to use illicit funds in your product or in your business? For me, it helps demonstrate how detailed and how segmented all of these elements in AML is and their ability to interlink with each other. If you don't collect the data, you don't store the data, you can't analyze and then report on the data.
It's hugely complex, right? Trying to solve that. We are a technology business. We thrive on solving our customers' problems, but when they look that complex, what sort of advice would you give to a consultant running into a bank, ready to solve AML, and then you put up that picture? That would be pretty daunting. What would your thinking be around getting over the barriers, specifically about the banking sector? Let's think about banking. If I was trying to add real value as a consultant and drive technology decisions inside the AML space in a bank, what sort of advice would you give?
The biggest selling point would be their benefit in terms of time. Right now, they spend a lot of money, not just on the technology, but on time, because the outputs of the technology are resource heavy. Their technology has the output of alerts, and they need investigators to look at the alerts. And we know that in the ML sector, between 90 to 95% of any alert generated out of a transaction monitoring or a watch list monitoring system is false positives. And that's just in terms of the design. We have seen great success stories on the use of AI and machine learning to reduce false positives as part of an alert triage process. So reported they were able to implement the solution and reduce it by 77%. We are yet to see more use cases. HSBC in the States partnered with Google to do something similar and reported that their new tool, Dynamic Risk, increased suspicious activity detection by 50% and reduced false positives by 60%. There is huge value in terms of the success cases and the amount of resources you will save if you are reducing your false positives. If we time box the amount of time a human needs to look at alerts, whether it's a watch list alert or a transaction monitoring alert, you're going to average between 30 minutes to 2 hours per alert. Depending on your volumes of transactions and onboarding, you could be generating between 100 to 200 alerts a day. You're going to need 3 to 4 resources just looking at alerts, 90% of which are false positives. It's a wasted resource. AI has a very proactive role in respect to that. Now, the benefits of AI can literally spread through that entire diagram I showed you. That diagram applies to every accountable institution, whether you're a bank or an attorney. This applies to everybody. This is not industry specific. This is the legislation as it applies to all accountable institutions. So if it does scare them, I don't have a lot of sympathy for them. They should know what their obligations are. Yeah. But in understanding the benefit of AI, the benefit can exist in every single of these pillars and all of these building blocks. It exists in terms of data collection, data clarity. It exists in terms of validations. You can use AI in respect of your alert triage. The most valuable one, because machine learning has been a part of AML technology, I would say in the past 10 years. There have always been these sophisticated algorithms in respect of peer profiling. Risk deviation behavior is the most valuable transaction monitoring control you can have in place, because all it's doing is it's assessing customer behavior and identifying any spikes or deviation to that behavior. And that's critical in mule account detection. So it's extremely valuable in the banking space, in high transactional volume spaces. So they're going to see more valuable outputs. So when we talk about impactful reporting is ensuring that you've done an investigation to sufficiently that you have a very firm suspicion of money laundering, terrorist financing, or proliferation financing. And what happens once you've gone through an inspection and the regulator says, why have you not reported anything? They take a very risk-averse approach and they report everything, which is wrong. You should be reporting impactfully, and you should be reporting on true indications of suspicions for money laundering, because it feeds back into your risk-based approach. In AML, everything is connected. Everything is connected, from your customer accounts to how you monitor, to the risks, how you set up your frameworks, how you set your policies. Every single thing feeds back into each other. The number of STRs that you report highlights your risk profile for having suspicious behavior. That's going to increase your overall business risk assessment. You cannot look at anything in your business in isolation. I would segment to a bank and show them the benefits throughout your control environments, from your customer due diligence, be it collection, high-risk customer monitoring, to watch list screening, to your reporting. AI can be used to triage alerts. It can be used to have detection rules. It can be taught to incorporate new trends and typologies into your monitoring systems, which is a pain point for many technology service providers. Currently, without AI, you have to design the rule, build the rule, test the rule, implement it, and then deal with the backlog of alerts. With the introduction of a machine learning algorithm, that will reduce that entire life cycle of software development. It will allow you to seamlessly integrate new trends and highlight any customer behaviors that may be in line with a trend that's been recently published. Because the criminal modus is frustratingly proactive, your existing rule-based transaction monitoring systems are not. So you are forever playing catch-up. Now, this can go both ways, because criminals will make use of dark AI as well. So the positive use of AI will allow you to have predictive analysis. So right now, ML is very reactive, and we have not found a solution to break away from that. With AI, you will have predictive analysis that will predict behavior. It will predict legitimate behavior. It will predict criminal behavior. And I think that will result in more effective flagging of customers and behaviors, detection, that will ultimately result to prevention and hopefully lots of enforcement.
I wanted to go back into thinking a little bit about the human. We often talk about bringing the human into the loop. There's always this conversation around, oh, well, my AI is going to do something crazy and say something wrong to my customer. And then there's always this negative perception that AI is just going to replace us and take all our jobs. But in this instance, especially where you have the reporting factor, and the reporting factor is by a human. You and I spoke about the whistleblowers and how ethical you have to be in this space to manage this kind of reporting, especially because you speak about the really sort of the dark parts of this industry, where technology then becomes the reporter and can actually look after the whistleblower in some essence. I know you've had some experience around this, but if there was technology in those investigations, do you think it would have played out slightly differently?
Now that you mentioned that, and the wheels have started turning, I would have loved for there to be an AI in my shoes. But with that being said, the AI will be able to do whatever you teach it to do. So it's going to operate the way you design it. So if you design it, keeping in mind the ethical principles of it does not apply any discriminatory practices, right? Which becomes a little challenging in ML because we do judge you based on jurisdictions and your corporate, your corruption indexes and your indexes for laundering review be realistic. We need to go into deeper levels than that and have true understanding of where the risks actually lie. If you are able to train on the principles of non-discriminatory data, confidentiality, and data security, there's continuous learning, revision, and review of your model. Your model and your rules are actually transparent and you are able to explain them and they are reasonable. How you train it to do various roles will be dependent on the organization. Should the organization wish to train a model to an extent that it is able to detect, investigate, compile a report, and submit the report to the FIC on its own, they are very well within their legal rights to do that. The responsibility and the accountability to comply with the legislation still sit with the senior management of that AI, of the accountable institution. So nothing prevents them from doing that. How far we are away from doing that is quite a journey. I think in the past 18 months, there's been quite substantial developments in the banking space in the introduction of AI. We've seen two major service providers in the big banks, and they are producing great results. They trained AI to play a level of triage of alerts. So what would happen is that they would have a transaction monitoring solution, AML technology from another service provider. They would introduce their AI model that will sit as a layer on top of that technology. The technology will produce these alerts. So it would have its own detection rules and its own mechanisms to flag behavior or matches with sanctioned people. This model would dodge the alerts. Instead of an investigator having to deal with 50 alerts a day, they're now dealing with 7 alerts a day that are more likely to be suspicious behavior. So they are spending a longer amount of time on fewer alerts, and they are actually working towards impactful reporting. In that instance, it did not replace any investigators. It gave you better quality data and allowed you to apply yourselves better to every investigation. There was still a level of investigation done at a human level. So what we envisioned from an industry, and if you speak to Willem Kruger or Paul Snyman, we've chatted about this in the past, it's very much around a hybrid approach. We envision it being a hybrid approach, that you would work side by side with AI. There would be a deep understanding of your own data and the use of AI to conduct high-level analytics, to be able to curate your models, to have a deep understanding of your data structures. But we don't see it really replacing ML roles. But those mundane roles, and I think any person in a position where they are doing something that is a fairly simple, uncomplicated process, AI is very likely to replace those type of roles because it'll be simpler, it'll be cheaper. But to stay relevant, you really have to be strategic and you really have to evolve with technology. Find a way how it can enhance your role and the value that you add in the space, as opposed to just being completely resistant to it, because it's here and it's going to stay. If we look at the stats, PwC reported a 90% increase in the use of AIs in banks in the last year. I think, we talked about where's it going to be in 5 years' time. I think we can start looking at 2 years' time. It's very fast moving. I was always of the view that, anyone that's going to introduce an AI model needs some time. AI needs to learn. They need to be able to digest the existing transactions and the behavior, the historic stuff, and going forward. But the processing speed of some of these models are insane. So their ability to import and digest information is quite impressive. They may be able to achieve, 10 years worth of backlog data and have an understanding of it within seconds, as opposed to an 18-month journey.
Yeah. I'm about to change tack here and go sort of moving away from the reactive into the more strategic. And I mean, we're very proud of the behavioral capability and the real-time capability. Before I do that, I see a bunch of chats going on. Are there any questions the audience wants to ask Danika at this point?
Moritz, go ahead.
Hi, Danika. Thank you. Very insightful chat. Thanks for hosting it, Matt, and thanks for your input. Yeah, 2 comments. Of course, South Africa needs all the help it can get in terms of AML because we're grey listed currently. I think we're the 4th country to be grey listed, just in terms of our ability to, like you said, we have great legislation, but the implementation of those controls are not always as perfect. So yeah, I think there's work to be done, which is good news for the likes of Matt and people in the space of AI. My question, Danika, one of the observations I've made in terms of the cost of ML is that the lists, the sanctions list, the PEP list, the politically exposed persons, and the PIP list, the politically influential people, all those lists, the data sources are obviously critical, right? You need up-to-date data. And there are a few vendors who actually collect and aggregate that data and then make it available to solution providers, the tech providers. Do you have any insight on that? And where you practice, do you use a third-party solution to do your screening for sanctioned individuals and entities and PEP and PIP lists? Where do you get that data from? Does that have a big commercial implication for you and your clients? Even with AI, I can do pattern recognition and anomaly detection very well. But ultimately, as part of the regulatory obligations, you've got to do that screening, and to screen against a list, you need the list, right? So what's your view on the cost of access to the data that is part of one's regulatory obligations? Thank you.
That's a great question, Moritz. This is an area I have an issue with. Those comprehensive data sets are expensive. I think the best is WorldCheck. The reason for that is the way they curate the data. They have a group of, I think, 50 ACAMS accredited individuals, and ACAMS is your international accreditation for money laundering. It's an American designation, very expensive, and these are highly skilled people. These are researchers that sit every day and mine data and build databases. You are getting credible data when you go with them. I will only say that because I have looked at the back end of their systems and they are brilliant, but it's not a cheap solution. And I have a problem with that. You cannot expect a one-man show that's an accountable institution to pay that big bill, and they can't. They legally can't. But let's step back a little bit and understand what your legal obligation is. Your legal obligation in terms of FICA is to scrutinize your customers against the targeted financial sanctions list. And those lists are freely available. You can go and access that list at any point in time, so long as you keep a record of it. If we talk about sanctions, and this is the reason I like the term watchlist screening, because watchlist screening incorporates sanctions and politically exposed persons and other high-risk persons. There's no obligation for you to scrutinize your customer to make sure that they are a politically exposed person. That is a risk control. You might be dealing with a politically exposed person that presents a high risk for money laundering because politically exposed persons have a high risk for corruption. But there's no legal obligation to screen against a politically exposed person. Also, there is no comprehensive data set against politically exposed persons. So if you look at guidance note 7 that the FIC has published, they'll tell you where you can go find the websites. And it's the government website. There's also a CIA website. Now, all of these data sources are freely available. As a country in South Africa, we are only obliged to screen against the United Nations Security Council list, and there's a consolidated list. If you are a company in South Africa and you have relations with United States companies like Visa or MasterCard, contractually, you likely have an obligation to screen against OFAC. The same applies for the United Kingdom and for the European Union. If you have contractual obligations with them, then you have a contractual obligation to screen against a list. From a sanctions point, there are 4 main lists, right? It's the United Nations, OFAC, United Kingdom, and the European Union. Other jurisdictions like Singapore and Australia have their own, but they generally will replicate what's in OFAC or the UK or the EU. Right, so that's first understanding what you legally have to do. If you fail to comply, a screen against the United Nations Security Council, you will be non-compliant. But there's a tool on the FIC website that allows you to go and search any customer you have. These controls can become very onerous if your volumes of onboarding are high, because it means you're going to go line by line, name by name, and put in every customer's name that you have. That is why it's easier for you to have solutions that do the screening for you. But nothing prevents you from building your own AI model that will speak to all of these websites and build your own screening tool. And that's possibly a solution that you could have as well. But I want to show you how simple this is, because I think not a lot of people are aware that these tools are available. Please bear with me. I'll be quick. I need to be out of here in 10 minutes. So I'll try not to take up too much time.
While you look to share your screen, Vikram did ask if you would be able to share the diagram, the 7 pillars of AML and compliance.
Sure, I'll share it with you guys, and then you can post it on your page, and then everybody can access it. So this is the FIC website. This is a free website. You can go in and you can literally put in any details and then search them. You can search by jurisdiction. You can do the same on the OFAC website. A lot of people ask, why do they need to search against OFAC if they have no implications with the United States?
This is where anyone drops off the call who we need to start investigating.
But you can go in here, and what I like to do is I like to see who they are sanctioning in South Africa. So I can literally just go in and search South Africa, and anybody can access it. Right now, there's still 48 people that are sanctioned on the OFAC list. With the United Nations.
Do you know if one can download it? Can you download this list? Oh, wow. Okay. That's great.
All of these lists are XML enabled, and you can access them at any time. So I hope that answered your question, Moritz.
Thanks, Danika. I was looking for sources of data like that. Thank you.
I do have a position paper that I'll publish on LinkedIn, and you can access that. All the links are in there.
Awesome.
I'll check for it. Thank you, Danika.
Any other questions? No. Cool. So I want to just talk a little around sort of getting out of the reactive and getting into more of the let's build solutions, put AI in place to actually be a lot more strategic. And obviously we're very proud of our capability around behavior, understanding behavior and being able to use data in motion and understand real-time behavior. When we're talking to customers, it's often customers clamor to the very practical stuff around, we can sell more with this technology, or we can get them to use more of our products, which is great. But as solutions like this settle into your landscape, and as the algorithms kick in and the AI learns, you can get insights into future strategic ways of dealing with things. Now, from a more positive way, if you're a bank and you really understanding your customers' behavior, you might over years identify that your product set actually isn't suitable for a certain target market, and this will strategically allow you to design a product because of the insights that you've gotten through the technology. From an ML, fraud, that sort of space, do you think there's a real opportunity for organizations to become far less reactive and not wait for things to happen to them, put all this rigor in place?
Yeah, I think the biggest mistake is that they see it as two separate objectives. It actually has the same purpose. The data that you're looking at that is going to help you drive your strategic planning and your objectives in terms of understanding your customers and their wants and needs and their sales is the same data you need for ML, because you're just looking at the same data set from a different angle. What is this telling me about their behavior and the potential risks for money laundering and terrorist financing? It's not a different exercise. It's the same data sets, and there's value in it for both aspects. And I think they don't leverage off AML statistical data for sales purposes and vice versa. Because at the end of the day, it's both telling you what is your customer behavior. This is what normal behavior is. And if you don't have a deep understanding of your customers, their behavior, your products, how the products are used, what the preference of the use is, then how do you justify your controls from a risk point of view? Because everything in your control environment has to be justified from risk. I think maybe that's one of the biggest shortfalls that we have, is a lack of understanding of risk methodology. And the ability to tie in these two data sets to explain it both from the strategic benefits as well as from a risk point of view. If you've done this exercise for people and given them these data sets, it's very likely sitting in a sales and a marketing space. I have not, in my experience, seen that data flow up into a compliance space unless I've done it myself, pulled the statistics from an assurance or a review point of view, or insisted it's shared with me. That lack of correlation between the two is really the break. You don't need to duplicate the effort if it's already done for one purpose. Everything in AML is having that deep understanding of knowing your customers, knowing your data, employees, products, services, and most importantly, your risks. You can't know your risks if you don't know the rest.
Great point. Often what we run into is, and I would imagine in when legislation's trying to manage and do the how or the implementation part of ML, especially in countries like South Africa, skill sets and training and all that comes into play, because I think we lack a huge amount of understanding and skill set. What's your take on how we get, and not just the private sector, but the public sector trained and adopting these sorts of solutions, using them for AML?
I think we've identified for the past couple of years that there's definitely a skills deficiency, especially because the ML control environment is so broad. You see very segregated skill sets, and there's rare opportunity to cross skills. Somebody involved in customer onboarding doesn't necessarily have the skills in transaction monitoring, or those in transaction monitoring don't necessarily have the skills in respect of risk methodology. Now, for any compliance practitioner, you are expected to have the full scope of knowledge in terms of AML. You must understand every regulatory obligation and all control environments and alternate control environments. If you are the Section 42B in an accountable institution, that is the compliance officer, that is the expected extent of your knowledge. So from a Compliance Institute of South Africa point of view, CISA identified this weakness together with BASA, and they then implemented the Anti-Money Laundering Compliance Practitioner designation. So that is part of a program where there's extensive practical training, and then there's a board exam to recognize those individuals that make the designation. There's one of two designations like that globally, one in South Africa and one in Hong Kong. Ireland's looking at having a third. From an industry skill set point of view, there has to be industry body information sharing. We have to be mindful that people get very scared about, oh no, I'm going to contravene POPI. I'll say this a million times. The interests of justice and public protection will always trump up, and you have a legitimate basis to process this information for the prevention of crime. So your ability and willingness to engage with your peers in the industry, share case studies, share knowledge, talk to them about, I've sat in this demo, this technology has this functionality. I've learned the most by sitting in rooms with my peers, by speaking to people, by being able to share the stories. If you are not in the room, you lack the exposure and you don't learn, you can't upskill yourself. As much as there's courses and stuff out there, without this being done with CISA, I was not exposed to where I was practically taught how to implement. Everybody can tell you and sell to you what the legislation says. We are not arguing about what it says. I want to know the how. Teach me the how and give me alternatives to the how. And I haven't found outside of this where those discussions happen. And the more that happens, I think you're really going to address that skill shortage, because the more knowledge you are exposed to, the more you know, the better you'll do.
I know you need to run soon. I don't think there are any other questions from the audience, unless I'm wrong. I wanted to come to sort of a close just to allow, I know there's the next tech session that ecosystem are going to be running next, but any sort of parting words, you know the audience, you know what we're trying to drive. I think this has been phenomenal. It's really given us great insight into a space that we really know little about, that we should know a ton more about. Any sort of wise words of wisdom that I can add to my sales repertoire when I'm calling on a banking executive in the compliance space?
So this is me speaking to compliance officers, which is more challenging than speaking to tech people, because you guys are much more chill. Don't fear the unknown. It's very similar, our reaction to crypto, and when we had this boom of crypto assets. We didn't understand it, we didn't know how it worked, and we're resistant to it. It's the same with AI. Don't resist the unknown. Learn. Understand the capabilities, understand the risks, understand the weaknesses, understand the benefits to your organization. And it's not going anywhere, just like crypto. Embrace it and make it work for you. The how is up to you as an organization. Use what's out there. And my most famous thing is when you know better, you do better. So know better. Go out and learn and figure out what the better is.
Awesome. Thank you so much for your time.
Thank you so much for having me and letting me ramble on. If you have questions, shut. We'll talk about this till the cows come home.
Perfect. Thanks so much, Danika. Thanks, everyone.